So let's classify some activities. This is our cash flow derivation. And we're going to keep coming back to our silly little account analysis that I love so much. And we're going to see if we can get an idea about where some of this stuff should go. And we'll start with the accounts where there is infrequent activity. And those are going to be our investing processes and our financing processes. That's where we don't have a lot, we don't have millions and millions of transactions going through those two processes. So the accounts that we generally use for investing or financing, based on what we have here. There are other accounts that we will use, but just based on what we have here. For investing activities, we are likely looking at PP&E, property, plant, and equipment. And for financing activities, we are looking at two things. Actually, three. Long-term debt, owner's equity, and retained earnings. There may be things in these three particular accounts that may impact financing transactions or financing cash flows. So let's start with investing. Let's look at PP&E. So we've got PP&E is the account. I'm going to put a little PP&E Net. PP&E Net. So what do I mean by net? Well, it's net of accumulated depreciation. Now you can split this out and say I've got PP&E and I've got accumulated depreciation. I don't care, but I'm going to do it all combined. Just trying to get you to think simultaneously. Think laterally about what happens when you've got this PP&E and accumulated depreciation, what happens when you have it net. And trying to figure out what are all the things that could make it change. So, we've got our beginning balance, and we've got our ending balance. And now we want to find out what is going to make PP&E increase, right? So plus some stuff, right? So what's going to make PP&E increase? What do we think? Well, things that might make PP&E increase might be purchases of new PP&E. That would make PP&E go up. What's the effect on cash flows when we purchase new PP&E? It depends. Do we pay cash or did we finance it? If we paid cash, well, that's cash going down. That's a decrease in cash. And you can see that, right? We go back up to our derivation. Everything in here, if it's an increase in PP&E, this minus sign goes to all of the terms inside the parentheses. So if PP&E increases and only increases, that's going to be a reduction in cash. If we finance it, well, guess what? No cash involved. This becomes, if we finance it, there's also going to likely be something in long-term debt that we'll have to deal with, right? Because long-term debt's probably going up and PP&E is going up, but there's no cash involved. So this is a non-cash disclosure. If we finance it. All right, I like it. What's gonna minus some other stuff? What's gonna make PP&E go down? What's gonna make PP&E net go down? Well, what if I sell my PP&E? Again, I could also have the same thing, cash finance. Most of the time I'm not going to self-finance a sale of my existing property, plant, and equipment. I'm likely just going to get cash. What else is going to make PP&E go down? How about depreciation? So now, when we think about our three items here, right, and there's other transactions that could happen. We could do an acquisition. Well, that's purchase of new PP&E. You know, we could sell a division. That's selling PP&E. There's a lot of different things that can happen here, right? We could retire PP&E, dispose, variety of different things. The only two items that have cash involved with them is, unless I'm financing it, purchase of new PP&E and selling PP&E. Here, cash is going to go up. Right? PP&E goes down. That means that the effect of that is cash goes up. These two items here are going to be investing cash flows. These two items right here. Depreciation, we're going to have to come back to that, because depreciation is a non-cash item. That runs through the income statement. It lowers net income. So we're going to have to come back to that. And if I retire PP&E and I recognize a loss, losses are also going to run through the income statement. Just as if I sell PP&E for a gain, gains are also going to run through the income statement. But we are going to report full amount of cash when we sell it. So if we sell it and there's a loss or a gain, we got to do something with that, because we're going to recognize the full amount of cash. We'll come back to these three items: depreciation, losses, and gains off of the sale or retirement or disposal of PP&E. But when I look at PP&E, there's going to be two items, and both of these items are going to go to cash, and then we've got to figure out what to do with these gains and losses as well as depreciation. We'll come back to that.